Okay, again, good morning. Thank you for joining us. This session is now being recorded. It is Thursday, September 1st. This is the launching date of the ICT mentorship. Welcome if you are a member. The questions tab or comment section or chat area is not being I'm not paying any attention to that during these trading sessions. So just as a reminder, if you have questions, hold them until later on into the afternoon, whether we're doing London live or New York. There will be a recap session later on that day, so I'll make myself available for any questions in that capacity. Before we get into what's going on in the markets today, the calendar for today, we had at 4:30 in the morning, British pound had a manufacturing PMI come out. The numbers were a nice mask for them to expand price up into a range that we'll look at. We had expectations for British pound to create a high, and we're going to talk about that. That would lead to a potential setup for New York. There was no trade for London. Go back and look at the Twitter. We're going to have that also in this video. But we have a skill set practice for a potential turtle soup, and we'll look at that as well. But we're actually going to be looking for a trade setup during the 7 o'clock window to 9 o'clock in the morning today. And we're going to use the price action that was given to us throughout London to frame some kind of a setup. We still have at 8:30 in the morning, about a little bit more than an hour from now, we have the unemployment claims. So that's another high impact. And then we have later on at 10 a.m. New York time, we have ISM. So we have a little bit more volatility injections left for today. So looking at what we have here, we know that tomorrow we have non-farm payroll. Let's take a quick look at that real quick. And you'll see the New York session is loaded with a lot of high volatility market drivers. We have some things for CAD too, so dollar will be pushed around a lot tomorrow. Okay, so giving that as a precursor for tomorrow's trading, and we know that we generally do not trade non-farm payroll, but I will be active. We'll have a live session tomorrow, and we'll actually have commentary and maybe do some practicing on non-farm payroll during that numbers release. We'll have some pre-market expectations and where the liquidity would be resting, and we'll look and see if those things pan out for a price action skill set. So let's go over to the charts. And I gotta go back here and switch my sharing to okay. And we should be seeing a dollar daily chart. It's a USDX. Now some of you still ask questions as it relates to what broker I'm using for US dollar. Again, just real quick, it's Forex Ltd. Okay, so in Twitter, I gave indications that I felt that we're going to be reaching for the liquidity resting above these highs right over here. So right in here we have a liquidity pool that I believe has some, in my opinion, some draw on price. We had a nice reaction in the numbers for GBP, which we'll look at in a couple minutes once we're done talking about the dollar. We have the liquidity in here that's resting just above present market action here, and we have a bearish order block right there as well. So we may have a wind up for pre-non-farm payroll, and we may end up seeing that price movement during the non-farm payroll release tomorrow. It doesn't negate the opportunity for seeing something today. I was just hoping that we would get something to form a New York session trade for today. It would have a little bit more of a volatility in the New York session and less volatility in London. But we're going to go over to a 15-minute time frame. We're going to look at okay, so we have New York delineated here. Market rallied up. We had a nice expansion going into the London session here. We had equal lows in here that was taken out initially, ran out the bodies of the candles here, really had no willingness to get above that 96.20. Now, we talked about 96.15 and 96.20 as potential areas where the dollar would reach for. We have parameters given by way of Twitter, and I'll have those tweets actually overlaid in the recording. So I can't show them here, but they will be in there, but I'll give you basically a reminder as well as describing for an outline for London. We were looking for movement for the cable to move up into a previous high, okay, run that previous high, and potentially have a setup in London. And we would want to see that sell-off and then have a setup going into New York based on the price action that we would anticipate in London. Okay, so we're going to be looking for a potential setup in a sell for British Pound USD. That would indicate also further bullishness for dollar index. Now, 96.20 was not able to have any movement seen past it. It was hit, just breached a little bit above the bodies of the candles in here. Okay, so that's while we were looking for 96.20 and 96.15 as potential reactionary levels, because these are actually daily bearish order blocks. Okay, well, more specifically, the 96.15 is a bearish order block. So when price hits that, let me go out to a daily just so you can see again why that's important, why it's even being mentioned. The low on that candle is 96.15. We had that noted the other day. The links are in the Twitter feed as well. Price, we mentioned 96.15 to a rounding up to institutional of 96.20. Now go back into the 15-minute chart. And the reaction we've seen going into the London session. We ran right up into it, and the bodies of the candle of the old high over here. Okay, not the wicks, the bodies of the candle in here. That's where the liquidity rests, just above those levels when it's the bodies. They ran right through it and then immediately rejected and traded softer. Now we have gone back into a small bullish order block in here, and we have a liquidity void as well. Now that's what I'm primarily focusing on, and I want to utilize for today during the New York session. Okay, I really want to see the range stay tight in here. Okay, I don't want this whole area right in here for the dollar. All this, I want this to stay just like this, stay inside that range. I don't want this low taken out yet, and I don't want them to come up here and close in this void. Okay, we have a really nice little gap in here, right at the 96.15 level again, and we have the void right here. So with this, if they leave it in place like this, okay, what I'm looking for is the market to stay in consolidation ahead of the numbers release at 8:30, the unemployment claims. If we get that release at 8:30, which is roughly a little bit over an hour from now, and we'll still be here talking, the market, I'm hoping, will see the dollar run up in here and hit that, and then not blow through the high that was formed in London, because we're assuming at this point right now, just for London's setup, trading into New York, we're going to say that this is the London high. Okay, and we're going to come back potentially closing this range and then see further weakness on the dollar. So our higher level objective, near term just for today, will be put aside, and we'll probably look at those levels being hit. We were talking about the daily for non-farm payroll release tomorrow, because there's a little bit more volatility in that release than the one we're going to see today. So just for a New York session setup, we're looking for about 25 pips for a setup today. And if we're looking for the movement up into this level here, 96.15, it can go to 96. Yeah, it could stab up to around 96.18 or thereabouts. And we're going to be looking for that as a setup for another run lower on dollar to take out this initial low in early Frankfurt. I'm sorry, early Asia rather. Now, what translates for the cable, this is what we had yesterday in our charts. Well, maybe not yesterday. Well, it was yesterday. Yeah, it was yesterday. The in the Twitter account, I was highlighting this high, and I noted between 2 o'clock and 4 o'clock in the morning, we would be anticipating a move up into a run on that 131.60 level. Okay, and we're looking at these levels down here, these stops. I really want you to focus on the 30.60 level, because I think if we get all of this movement here, this may be all given up during non-farm payroll and even run even lower for the 130.60 stops. Okay, so the stops that we've outlined below these lows over here, they may be the actual level that the non-farm payroll will be seeking. Okay, if we get some breakdown. A lot of reaction in here in price. Went up to 132.60 level. Let's go ahead and look at that. And again, all we're doing is we're framing an idea going in ahead of the numbers at 8:30. So what I do in the morning, I get up around 20 minutes to 7. I'm usually in front of my charts, and I'm looking at what's already happened in London. Okay, we have a huge range here, all on one hour candle. This is the actual time window where we were looking for the movement up into the previous high right in here, and I gave you guys an exercise to see, okay, if it runs through that, okay, practice it as a turtle soup, use a 30 pip stop, and if you can get a 30 pip stop in, look for a 60 pip potential move, and we're going to be looking for a move down into this order block here if we were able to get that. London did not give any indication that it wanted to go softer there, but it went up into a previous area of old liquidity. What I indicated it with the dollar, what we're going to probably see is another run sweep above here, and it'll be interesting to see if we got this range not completely closed in. I think they're actually pushing this up, building in something of a short-term premium on the British pound, and then they're going to actually kind of attack this range in here, because this is really porous price action. It's really quick. They ran it up through there, and usually going into non-farm payroll, there's some measure of pumping. Okay, ahead of the numbers, they'll have a lot of price action going one direction, and when that usually happens, non-farm payroll usually unwinds all of that. Okay, or at least a large percentage of that range that's created ahead of non-farm payroll. So what we're going to be looking for is that dollar to rally back up into this void in here. Okay, and again, we don't want to see the low. If we lose the low here, the odds for the New York session trade setup fall off. It doesn't mean that we can't watch price and study it, but for our setup, I want to maintain this small little consolidation in here, and I want them to come up, close that range in here first. If it does that, okay, while it's trading up here, it's going to cause the British pound to want to dip down a little bit into this range, and then drive ultimately higher through the buys of these candles, because we only went through it just a little bit. I think they're actually going to drive a little bit more intraday today for the New York session. So while our preliminary expectations for London to give us some kind of a framework to work within in New York, for those that were up in in London, this would have been an area to practice the turtle soup. Now, some of you that are new or watching this are saying, well, I put a real short on, or I put a real stop on at 30 and it hit me. That's exactly what's going to happen. You're going to do these things and you're going to get a negative response. And by learning that, okay, what it's telling us is, number one, it's been driven up to an area of liquidity here, but it has yet to really clear out these levels decisively. We have this old high that it wicked through. The body's in here, still relatively not cleaned out in my opinion. So I'm expecting a little bit of a move down in here, not the entire range for this session today, but I do believe this is going to be filled in tomorrow during non-farm payroll. That's my expectation. But using what we have already in the charts, you're going to see that New York session has a lot of built-in advantages, okay? And that's why new traders shouldn't be in London, because number one, if you aren't versed in the expectations what should be happening in London, you're going to get beat up and chewed up a lot. So it's good to start as a new trader with practicing and outlining what you think is going to happen in London, and then waking up or getting in front of your charts, okay, ahead of New York and seeing what's actually panned out. If it's going completely awry and you don't see anything that you had outlined for London, you've got a advantage by having seen what's already occurred in London session. Whether you take a trade in London and lose, or whether you have an outline in London and it pans out, all those indications that are actually framed in London, okay, ahead of the New York session at 7 o'clock in the morning New York time, they're all going to be referred to build either a model for New York sessions trading or a reason to be on the sidelines and still just monitor price. We're actually going to go in and look for a setup to trade with them with a 20 pip, 25 pip objective. And as the markets get closer to that 8:30 in the morning window, we'll be able to map out where we may see price reach for ultimately for intraday liquidity. So let's see what we got here for the euro. I haven't looked at that yet. Okay. All right, so we have we may have a setup in euro versus the dollar now. I'm sorry, euro versus dollar on this one. Prices come down, hit the order block here. Let's go into a You're probably already looking at it too. Way too clean in there. That's an anomaly that doesn't exist long in price action. So we do have a potential, what is that, 111.95 to 112 big figure. So potentially 45 pips there in range. We've already hit the order block several times in here. We did break another short-term high, and we do have a little bit of a clean level here as well. So we have liquidity layered at 111.70 to 111.90 for euro. And again, if we keep these ranges tight like this going ahead of the numbers, that'll be beneficial for us. Again, I don't want this to break down, because if it does, it's going to run ahead before the numbers. I really want to keep it tight in here and then see it come back up in here. Give it an indication it wants to rally, but then give it up and go lower. And that'll give us room for upside on now discovering the liquidity that's resting above these levels in here. Okay, so if you've not been following along, and I've been speaking cryptically, because sometimes I've been accused of that, the expectation I have is for the New York session between 8:30 and 11 o'clock in the morning, New York time. I believe we're going to see weaker dollar and stronger British pound and stronger euro dollar. Now, because of the outline of what we were anticipating for this morning in London, it drew right on through that, right to a level here. Now, this is already moved. Euro still has unchallenged liquidity in the areas that we're noting here. So while I came in this morning, well, actually got out of bed with the expectation I'm going to look for a move in cable, we may end up actually going into euro. I'm not convinced yet, but I'm just giving that as a potential. As we get closer to the 8:30 numbers release, we'll take a look at what's actually available in price and see if there is more merit to doing the euro dollar versus the cable. It depends, and the reason why I'm saying that is I'm trying to remind myself that as I'm thinking, I want to make sure I'm thinking out loud. It's something I don't normally do. But the reason why we're going to be waiting is I'm going to see how much of a retracement into this range we get ahead of that 8:30 numbers release. Okay, so we have a little bit of liquidity in here that was all one range, all 1 hour, and we're just consolidating right below a level that it's obvious that you're going to want to push through that one more time. And I'd rather see them retrace a little bit more and not just stay tight here, because if it stays in a tight range like this, okay, I'd rather see this. Keep the dollar in the range in here. Let the British pound come down and take out the low in here that they've allowed to stay in place so far. See, this has all been one-way movement, all one-sided. So they're leaving this low here near term. So I would rather than come down, wipe that out, okay, not go too much into this, because that'll mess up what we're going to be doing for non-farm payroll tomorrow. Because if they leave a majority of this range in here, that's what's going to be exposed and attacked during the release tomorrow at 8:30 in the morning New York time. But what we're looking for just for today is we want to see a movement down, take out this low. Once it does that, we're going to be down into a 5-minute chart. And what I'm going to be looking for is a sweep below this low in here, come down into this range a little bit, and then I'm going to wait. We're going to be on a 5-minute chart at that time. I want to see it move back up a little bit, and whatever that down candle is on a 5-minute chart, we're going to wait for it to trade right back down into that one more time. When it does that, I will do a live entry on it. I will put a live stop on it, okay, and I'll put a live limit order. The limit order is going to be around 132.70 to 132.75, and we're going to be looking for a run one more time to get through this high. That's what I'm anticipating for today. Now, why am I doing that? Well, because the expectation I had down here for a sell was completely railroaded. It didn't do anything to give a selling indication at all. The consolidation led here, okay, didn't see it push up and then come back down. It just drove right on through it, and they had this exposed range in here. So the daily range, we have to respect what was already done in London. So we have to say that this is the low, well, actually more or less, this is low in Asia. And then we have London confirming that low here with the advancement in price higher. And our belief ahead of New York is this is the dollar high during a London session. So while there's not a terrible amount of range, on the upside, we still have potential to run the liquidity above these highs. And we're going to be using the New York session to do that ahead of the numbers that are released at 8:30 with the unemployment claims. And I think that's going to be it. I'm going to take a brief break. I will come back again, so there will be 2 actual live sessions broken, but the recording, I'll actually blend both of them together seamlessly, so it'll feel like it was all one session, but in reality, there will actually be 2. Okay, so again, in recap, just want to make sure, and it's the only time I'm really going to ask any questions and look for feedback during this presentation. I'm looking for a move lower on the British pound to take out this low. When this low is swept, okay, either right before 8:30 New York time when the numbers release, or after those numbers release. Okay, we're waiting for the actual event to occur. Okay, we're not just going to just trade it because it's now 8:30. Okay, we're going to wait for this low to be violated. When price trades down, if it does it at all, it doesn't have to do this, but this is what I'm waiting for. If price breaks down below this low, okay, once I see that, I'm going to be eyeballing the 5-minute chart. And then I'm going to see on the 5-minute chart a rally away after it's taken out this low. So let's put this in right now, right before we go away. So this will all be waiting for us when we come back. Okay, so you guys can understand what we're framing and why. This is where those stops are for intraday. They're below the marketplace. It's all been one-sided on the upside. So what we're expecting is a move below that, clear out the stops that had been trailed. See, now it's consolidating. Okay, and the only thing we're going to be utilizing this setup is a run down below that low to clear out the stops. On a 5-minute chart, we're going to wait for the rally away up from that, and then when it comes back down and creates another return to a bullish order block, which will be whatever that down candle is on the 5-minute chart. When that happens, it should rally. And if it does, we're going to be looking for 32.75, and or the target may be a little bit higher than that. We'll see at the time of the setup. I don't want to give you anything more than that because I'm trying to do the very thing I normally do and not try to fancy dance it because we're in an educational venue with it. And euro dollar, this candle right in here, I'm watching this one for it. So we might have 2 setups to watch this morning. The main threshold is here. I don't really expect it to trade down into that. The reason why is it's already spent a lot of time in the 15-minute chart in this area here. So in this case, I would elect to use the top of the candle versus expecting it to dip all the way down into midpoint of that candle because it's already spent a lot of time there. Okay, so what would be necessary for me, it would have to come down to this level at 111.45, which would be a buy at 111.50 with a run to 111.70 to 111.80. Okay, so that's one of the conditions we're looking for euro. Okay, and it goes along with what we're expecting for the dollar, maintaining its bearish stance for today. So again, we're looking for this consolidation to stay tight, rally up, hit this void in here, close that in at around 96.15 to 96.18, and then wait for dollar to roll down lower, and then that'll give the room for the expectation for the run higher on cable and the run higher off the level that we had noted, 111.50 to 111.45 for a run to 111.70 to 111.80, maybe 112 big figure for fiber. So that's the outcome we're expecting. This is the framework we're going into the New York session, and I will come back about 8:15 Okay, I appreciate your patience for that. I'm going to collapse this so you guys can see it. Now, I did the long at this order block also when it hit it. I couldn't get on the GoToWebinar fast enough to do that. So I wanted you to see the trade here as I collapsed it, and I want to go over some of the things that went along with today's trade. The takeaways, what you're supposed to have. I already started the recording. I made a practice of before I can start talking, I have to hit the record button. So I have a little sticky on my laptop. It's reminding me because I messed up earlier this morning. Yeah, that's awesome. Thank you very much for your comments. I'm going to be real honest with you guys. This morning I'm in a little bit of a funk over the PayPal stuff. So, admittedly, I started the day with a little bit of a haze. So, it is what it is. Can I go to full screen? Well, I'm not sure what you're asking there. Like that. All right. So anyway, this morning I was looking at the cable. I wanted to have something to do for cable, but obviously the market had ran through on London. So the setup that we were using going into New York today didn't give us anything in line with what we were expecting. So I'm not trying to save face or anything, but I'm just reminding you that we were using London, okay, to give us a framework for a trade for a live session in New York. And because there was nothing that I could go by based on the expectation I had for London in cable, cable took off and ran right on through it. Hang on one second. This is the time of day where I'll actually spend all the time for all your questions. But if you load up the screen, I probably won't get to all your questions. And now since you're paying for it, I really want to get everyone's question answered. So if you're really just making comments like, you know, for appreciation, that's awesome. But just save that for Twitter. You know, we can do that in that group. I don't need to see all that in here because it takes a lot of time to go through all the questions. And if it's comments in there, while I do appreciate it, it consumes more time to read all of it. So if you hang on just 1 second, let me cover the material that was presented for today and what we were expecting going into this morning and last night, and how it didn't give us what I anticipated, but we were able to ferret out something for New York session, which is nice. But initially, we were looking for, or I was looking for rather, this area in here right above these highs. I thought for sure that we would probably get something like this. I mean, let me drop down a little bit. This high in here, I thought we were just going to poke through it and come back down here and close in a little bit of a range, and then looking for you know, something like this on non-farm payroll. Obviously, true to form, like it's going to be in your own trading, it's going to do what it's going to do, and you have to adapt to it. So while it didn't give me the outcome here, had I been at the terminal live, would I have taken this trade? I don't know. I don't know. I can't tell you if I would have, wouldn't have. I don't know. But obviously, you know ahead of time, I didn't have any of the outlined expectation come to fruition. Between the beginning of this rectangle here and the end of this rectangle is delineating the ICT kill zone for London. and right in the heart of it, went right through it, okay, and ran aggressively all the way up to 132.65. Then this morning, waking up, going into the New York session, as we said in previous sessions, the idea was that we were looking for a run down below the low and then try to catch a run like this, but only on the heels of the stops right below this low being tagged. Otherwise, I wouldn't be interested in chasing it. There's going to be a lot of times where you see moves like this, okay, and while you can go back and say, well, I could have bought this order block, or I could have done this or that, okay, that's just not how I'm going to do it as a trader. You can do that on your own if you want to feel like you're chasing price, but I don't want to do that. I would rather let the market come down in intraday and clear out a level of stops, because as we are consolidating, it's reasonable to expect anyone that would have been lucky enough to get long down here, once we create a swing low, they're going to want to jam at it and protect all this open profit. As it were, you can see that that was no interest at all for them to want to do that. They drove it up right from there. So let's go over to the dollar index real quick, and we'll see. We were talking about this earlier in the morning on the first portion of the live session, and it's really nice to see this type of stuff happen, especially when you're anticipating it ahead of time. So it gives you a lot of confidence as a trader that the things that you're learning, there's responsiveness to price action at these levels. There's a lot more structure behind your expectations and price when you have these things on your chart before the fact. And when you're expecting them with a level of understanding why it should be what it is. We mentioned this high being potentially what? The London high or daily high. And we have a void here where the market had aggressively. I'm getting someone saying there's no sound. Leah, I think you might be the only one that's having that. Is anyone else? Can you still hear me? Okay, yeah, Leah, it's just you, bud. It'll be in the audio recording in case it's a bandwidth issue. My live sessions are actually being recorded, so you'll never have any of the issues with sound if there's a problem during the live session. Okay, so now looking at the void that we talked about earlier this morning, okay, if we have the expectation that this level in here is the London high or daily high in place, okay, because our teachings suggest that during London there is a high probability it creates the daily high or low. And when we have that shown with a willingness to drop off aggressively like that at a level that we had already interpreted as a key level at 96.20 level that was mentioned back in, if I'm not mistaken, it was on the 30th or the 31st of August in our live sessions then, but nonetheless, price moved away, created a nice big porous price action or open range, okay, and we had a little bit of a gap in here. Now look real close. This is really interesting. I want you to notice these types of things. When I'm talking about order blocks or voids, we have the bearish order block, which is this up candle that is the last drive up before the start of the move down. So when this candle is referenced, we're going to be using that as the low, but up to the body of the candle as well. But look past it. Look at all this porous price action here. We have the down candle here, but it had a little bit of a wick. We have a down candle here, but a little bit of a wick. Then we have this gap from this candle's close to this candle's close. I'm sorry, this candle's opening rather at this price point right there. So we have that little bit of a pocket of empty space. But notice how the body and this body, it closes in all that anyway because it's already traded a lot. We have a little bit of wick here. Wicks have the thinnest volume. We have a wick here, but then we have this gap between the two bodies. You see that? This price action right here, when I sent the tweet, we had already talked about this in the previous two sessions of the day. So this is actually the third session that I have to compress into one viewing later on for a recording. But nonetheless, the market moved right up into this little area right there and closed that in. But specifically right to the bottom of this candle's wick. Okay, now watch. The low in that candle is 96.15. high is 96.15. What level have we been talking about all week for a dollar? 96.15 with a high of 96.20. So while it only went above it by a little bit in here, the high comes 2 pips above. 2 pips above the level that we were identifying as a key level at the banking perspective. So again, we're seeing a lot more confirmation that what you're learning, it's not contrived. It's got a lot of study behind it that's necessary, but that's what we're doing here. We're going in, we're looking for examples of where we can see price action, setups, conditions, and this morning, I'm going to be real honest with you, because of the issues with the PayPal, it just looks really bad for me as, number one, as a mentor and a new merchant, to have the processor say, we're not going to back you and we're not going to process your orders. It just brings a lot of uncertainty, and I would be concerned as a buyer too. So I had that all last night. I was thinking about that, and to be honest with you, I really didn't sleep much, not because of the nervousness about starting, because I don't care about that, but because of the PayPal issue. It was somewhat of an embarrassment on my part. I don't know how to answer for it outside of just being honest and telling you what they told me, and I can understand it, but that was the number one reason why, looking at the euro in here, this propulsion candle in here, right in here, we talked about this likely providing support, and I'm going to be honest with you, I saw this swing low here, and I thought to myself, as I was speaking to you, I said it's probably going to come down here and clear those stops and then hit this order block again. But I got to give myself enough room, so I went way below the London low. That's the reason why the stop was where it's at. And I couldn't focus. I really could not focus about, do I want to be in the middle of this range here, or do I want to wait for the order block to hit here? So you saw the trade that I took. You didn't see the entry, obviously, but the order was right at the body of this candle, and I collapsed it at the beginning of this portion of the video. But the idea was real world in a way, and you're going to have those same things. And I try to explain this to folks. They think because of the tutorials or the trade ideas or the levels or the analysis I give in advance, and it comes to fruition. I'm blessed in that regard, but I still have the same problems. You as a human being, it's going to be just like anyone else. You're going to have these issues where real world gets in your head, and you're going to have to trade through that. And sometimes it's going to affect your entries, it's going to affect your analysis, it's going to affect everything. And it's all compounded today with me because of, well, my credibility is on the line as as a mentor. That's how I'm viewing it. I mean, some of you don't have to agree with the level of weight I'm placing on it, but to me personally, no one's going to judge me harder than I do. So I would take a great deal of responsibility on by doing something like this with you all. And I've offended a lot of people by asking for money. And for all of you to step out and do what you're doing, I really want to be transparent as I possibly can. So I have all those things weighing on me. So that was the reason why I was sitting on the fence, a little uncharacteristic for me, because I don't like to trade when I have things like I just described to you now. If we weren't in a capacity of you're paying for a service and I got to teach it to you, I would have probably not done anything today, and I would have missed this whole move if it would have been just like an issue like what I'm dealing with PayPal, well, a personal problem, a personal issue. So you have to get through that sometimes, and I was ready to take it on the chin today and just say, hey, look, it is what it is. I can't be right all the time, but I'm glad that the Lord blessed me with an opportunity to show you something that came to fruition. I just wish I could have got on the go-to webinar to get this entry on at the time, but it is what it is. So, yeah, the level we talked about for sensitivity going into this week for fiber rather. Just so I'm not pulling numbers out of the air. We talked about the likelihood of 111.30 being a level to watch for a bullish order block to form and watch for a bounce to trade off of. Am I speaking to an audience that has that recollection of me saying that? I know I have it in the live stream, but I just don't recall off the top of my head where it was. Do you remember talking about the 111.30 for fiber? Okay, if any of you have your notes and you want to tweet that information where it's found in the live sessions that's already been pre-recorded and passed out, I'd like to be able to see you guys help me do that because the last couple of days I have not been able to be as organized, but these presentations will be. So when I compress them, and this is going to answer some of the questions I got on Twitter and some that are asking right now, why is there such a delay in the recordings? The recordings have to compile, and also because of the level of note-taking that I would expect for you to have taken from the presentation and the takeaways, if you will, about what specific insights you should have or learn from each session. I'm going to be adding all that into the recording, so that way it'll all be there. And in any specific screen captures with heavy notes that are real pertinent to your understanding, they will be also in a PDF format. Okay, so the PDF file and the recording, I've already told everyone to expect as late as 10 p.m., but it's important that you follow along in Twitter. So even if you don't get into the live session, I'll give you ideas to follow along throughout the marketplace in Twitter. Twitter's your way to keep in contact with what I'm watching, what levels should be sensitive, what I should be, what I would be anticipating. And I understand you're all excited and you're all trying to compress what I'm going to give in 12 months all in the first session. And that's great. I'm glad you're excited, but be reasonable, okay, because that's not going to happen. It's not going to happen at all. So just slow your roll, okay? You're in here for a little bit of time, okay? Expect to have to work for it, learn through time. Being exposed to it every single day, trust me, you're going to learn, okay? You're going to learn way more than just by watching my tutorials, okay? There's no reason to feel like you're behind, so don't worry about it, okay? We're here every single day, Monday, Tuesday, Wednesday, Thursday, Friday, from now on for the next 12 months. Okay, so you're going to see plenty of opportunities, plenty of conditions to practice in, plenty of things where it doesn't work out, and we have to show mitigation processes where we get through all that. Okay, so all right. So we talked about 111.30 for fiber. I didn't get the setup that I wanted for cable, but we adapted, and we went back to the reference point that we mentioned earlier in the week, that 111.30 for fiber. Now, why did I want to go into fiber? What do you think the reasons were outside of the fact that the 111.30 level should have been sensitive? And we'll go back to the higher time frame and show you why that was for those that didn't catch it. What is it that would have led me to believe? I'm going to give you the stage for right now. What made me believe that fiber would have upside? Very good, very good. You're all collectively giving the responses that I was hoping. Number one, we were expecting bearishness on the order block in the dollar. So let's go back over to the dollar real quick. Okay, so we were expecting the bearish order block here on dollar at a level that we had already pulled out of the analysis at 96.15. We've been talking about that the last couple sessions on dollar. We were specifically aiming at 96.15 with a willingness to see it move to 96.20 institutional. So the banks are going to have layered interest between the 15 level, which was the order block relative to the daily time frame, and then as much as 5 pips higher simply because of the institutional around 20. Okay, so we had that little bit of a range in here to contend with. But once you know the range, okay, now think back to Sniper series. Once you identify a range that you're going to be looking at, you need to focus specifically what is it in the range that you need to worry with. Well, we trade around the 5 levels and the 0 levels, and 20 is a highly active level in the banks, because what will happen is many times it'll sweep above the big figure, like the 96.00 level. That's what essentially it's doing here. It ran above it just a little bit, just to reach for the 20 level. And then it gave up the ghost a little bit, and then came back one more time to do what? to recapitalize that 96.15 level. The algo knows that the daily chart, that bearish order block on the daily, let's pull a fresh, where's it at? US dollar. No, none of the tweets are going to delete on the premium Twitter feed unless I make a very embarrassing typo, or if I make a inaccurate price reference point. I'm trying to be very diligent about pay attention, what I type, but none of the tweets will ever delete from that unless it's a simple typo. I have had that question a lot, and I'm glad I saw it again here, because I was actually forgetting about it with all the things that were going on. Give me 1 second. Okay. Leo, I thought about doing passwords on PDS, but I'll be honest with you, I learned how to break the password on the internet, so it's not necessary. As long as the information isn't being shared, the links or whatever, that's enough security for me. It's an honor system here. I already know some of you are going to do what I'm asking you not to do. I can't stop you right away, but if I catch you, I'm going to ban you. And if you put it on your website or your hosting stuff, I'm going to come after that. So just be respectful. That's all I'm asking you to do. Believe me, if you learn how to do this, you won't need to sell it or want to share it. You'll want to keep it to yourself, like I did for so long. But all right, again, this is the level 96.15. It's this candle right here that closes in this range, and we talked about that in the previous session, so I don't want to burn that out and use up all our time with that. But we know that the likelihood of that level being as sensitive as it is, okay, if we get a failure at that level, okay, these stops here are going to be put on the back burner. That's what we were anticipating last night, a run up into that. And it's still, even where it's at right now, it still could end up reversing what it's already done today in non-farm payroll. That's the reason why I hate non-farm payroll. NFP is not for professionals. It can do everything completely opposite to what you would expect reasonably in technical analysis. Even in my stuff, I can go back in and find all kinds of beautiful opportunities where even my stuff works. But I've been doing this for so long, I know that I just don't want to take that unnecessary risk just to satisfy an ego. I don't want to do that. And I try to discourage you all to do the same thing, because giving up one trading day out of the month isn't going to kill you. You just simply have to do your homework, and that's what we're doing here. I'm doing homework with you. I'm like a tutor, okay? Every single day, I'm going to take your attention and focus in on 1 or 2 really probable, not high probability all the time. Sometimes I'm going to give you medium probability, and sometimes I'm going to give you low probability, okay? But I'm going to outline. I'm not going to do like I did on Baby Pips to say, okay, learn your lesson, okay? I'm going to tell you this is a condition that doesn't have high probability if it does this or that. But I'll still sometimes go through the motions of applying it, because you'll be able to learn something from me, either not having it come to fruition and then have to mitigate from that, or if it's high probability, you'll be able to see the effects of being able to classify a high probability setup and then its reactions. And over time, of seeing it over the course of 12 months, you'll have so many sample sizes to choose from. Your memory will be loaded with it. You'll know, okay, I've seen this before. I remember when the market does this or that, I should expect this. Because of repetition, which is what you're lacking, because many of you haven't really sat down and had a structured approach to going into the charts using the tutorials, because there's so much information. What we've done this week where we have done a level at the dollar, which was 96.15 up to 96.20. So we have a level to keep our eye on. Even if we expect, like I was expecting, the run on this liquidity here, which still may occur in non-farm payroll, we still have to be aware of 96.15. So once you have that level, is this a 1 minute chart, guys? Is this like a 15-minute chart we're looking at here on the dollar? It's a daily chart. So remember what I said, I've preached this hard and long about how the daily chart and the 4-hour chart is exactly where the banks are going to be doing their purchasing and selling. They're moving big blocks of money on these time frames, because they need these time frames to work in all of the volume that's available, either through transactions or exchange between countries, just normal everyday business, but then you also have that same condition that the speculative side has to do. So when the market makers are working a book or making a book on a specific currency, they have to use these same rules, okay, these same ideas. And nothing's changed. It's just they will sometimes muscle the market around and manipulate and knock out those individuals that have open interest in either a stop or a pending order. Exactly. Live on the daily and the 4 hour. That's exactly what you're supposed to be doing. You're not going to get a million setups. I mean, think about what we talked about in regards to the dollar. Okay, we've had several days where it just monkeyed around with it, and ultimately it gave us a setup. The conditions of our pattern setups are always going to form around the levels that we arrive at on the daily and 4 hour. Write this in your notebook right now in big bold letters. There's going to be no significant price moves that will ever take you by surprise if you've done the work on a daily and a 4 hour. Every significant price move will materialize off of a level that's arrived at on the daily chart or 4 hour, and that's a 100% guarantee. That's an absolution, and that's one of the things there is in price action trading. The only absolution there is every significant price move. That means a dynamic price move or an explosive price move. They will always occur off of a level that's derived from finding it on a daily or 4 hour. That's millionaire status making information there. And so many of you, and I did this too when I was new, we want to look for these explosive things on a 5 and 10 minute or a 1 hour chart. And you cannot translate volume to those lower time frames. You can't do it. You can exercise entry relative to the volume that will be found at levels relative to the daily and 4 hour. So you have to submit yourself to saying, okay, I may be an ultra short-term scalper or intraday day trader, but you have to do your trades based on daily and 4 hour. You have to do that. If you don't do that, you're going to be trading with far less probabilities behind your setups, and you're going to be trading way too frequently, which is what I don't do. I don't trade frequently, but because of this medium and me teaching, you're going to be seeing me doing a lot more activity than I normally do as a trader outside of the scope of just teaching. But you're going to see a lot of setups, tons of setups, and by default, you'll learn how to find setups on your own. That's the goal here. Before we even get to the midway point of 12 months, you're all going to find trade setups, and you're going to be sharing them on Twitter saying, this is I found this, I did this. Believe me, it's going to be like a shotgun approach where you're just going to be like, boom, boom, and just laying them out. That's not my goal for you, but human nature is what it is. You're going to be so excited because you're going to be able to find them easily. It's just going to jump off the chart at you. So if we've had levels like this on the dollar, 96.15 to 96.20, it's not vague. Those levels are static levels. It's not a zone, okay? They are levels that we know we're keying off of, okay? We're not teaching supply and demand. We're giving exact banking levels where the actual orders will occur, where the setups will occur. You just have to simply wait for them, okay? You'll have conditions that you may anticipate, like I was anticipating a specific condition last night in London to trade on in New York. It didn't come to fruition. Now, I slept through basically, 45 minutes of the London session. I wasn't really aware of what was going on, and I forced myself not to look at it. I didn't want to look at it because I wanted to come in and have a fresh perspective, just like you would have in the morning. So when I sat in front of the charts with you guys, you were all seeing my understanding as it came, real time. So, and when I looked at the euro, I was like, okay, here it is. It was trading off of the level that we had talked about earlier in the week, that 111.30 level. And how many times did it hit this thing? Once. We traded through it, but look at the bodies of it. All these bodies of the candle respecting that 111.30. And then look at the body here, right here on the opening. The opening on that candle comes in at 111.30. Again, hang on to your questions. Some of you got really good questions, but I'm seeing them pop up, and they're very distracting. Like I said, let me get through the presentation part of this, and then I'll go over to the question portion, and I'll go through every single question. But don't put comments because I'm not interested in the comments here. Do that on Twitter. But real quick, yes, I see your question, Chris. The level 111.30, we talked about that level presenting a bullish order block, and if we get a setup, then we could take a buy to trade a bounce on it. We got that low formed here. Now, I wasn't even expecting euro dollar anything today. You all know going in that I was primarily focused on the pound dollar relative to what we were expecting in the dollar index. So my focus was primarily just on that. But in the real world, okay, you're going to get things like what we saw last night in the pound. It's not going to perform like you thought it was going to. So either you have to move to the sidelines or do what? If pound's going to rally, okay, if we see something in the dollar that indicates weakness, which we saw this morning in New York, it was after the fact of London, so we had to change gears and readapt to what the conditions of the marketplace were telling us, not forcing the will where I'm going to do what I want to do because I said I have to do it this way and only this way. No, you have to bend to what the market is telling you because you're never going to win that argument. So what I did was I went just real time, and you watched it in the sessions earlier this morning, I went and took a look at euro dollar, and I saw that we had found support right at that 111.30 level. And you actually hear me surprised, reactions in there real time. I'm like, oh wow, it's right there. And I knew that because the cable had already exploded up and it launched all through here last night, I can't trade that, neither can you. It's already moved. So if we understand that there's a likelihood for dollar to go down on a level 96.15, if that happens, okay, and we called it to 96.18 potentially also in the earlier session, so you'll hear that in the recording as well, relative to the dollar index. So we're expecting up to 96.15, with potentially moving to 96.18. Let me look at that just for a second and see where it actually went to. The high, yeah, 96.15. So I really didn't get that little piece above the 96.15, but we did get 96.15 nonetheless. But because I was looking at the cable having already exploded up, and we looked at euro pound. Euro pound, I told you it was trading right inside of its bullish order block, right in here. Okay, so when it traded into that, my thought process was this. Okay, if we're bearish dollar, okay, and cable's already rallied up, and euro pound is in its bullish order block relative to the daily chart, I have probability stacking in my favor that euro will have a run up to get back in sync with the run that's already occurred in cable, all this move here. The whole time that's occurring, look what's happening in euro dollar. It's consolidating. And what did I teach in regards to the euro pound? If the euro pound's dropping, that means that euro dollar is consolidating or dropping, or well, I'm sorry, euro dollar is being in consolidation while pound is rallying up, or euro dollar is declining while pound is in consolidation. Well, we saw obviously that cable had rallied and euro's in consolidation. Then euro pound went to bullish order block on the daily chart. So now you have to switch gears and say, okay, now cable is already moved. That's what allowed this move to drop down into the order block right in here, the down candle right for this big move. Because that down move was the last time we saw price there before it rallied up, when it gets down to that level again, there's going to be sensitivity to that same level. So we can expect to be a buyer of euro, no longer a buyer of cable with a great deal of expectancy in terms of the magnitude of the move. Okay, it can still move up in sympathy a little bit, but the explosive side is going to be on what currency? It's going to be on the euro dollar, because the euro is now going to be finding some support relative to this order block here. In other words, euro pound is not going to have the ease, if you will, to move lower, because it's now trading at a level where there's going to be a potential bounce. Now, combining these two things, combining the fact that we've already seen the British pound explode to the upside, cable's in consolidation, but it moved into a bullish order block on euro pound. This currency now has the freedom to do what? Expand to the upside now. It had to be held in consolidation until it reached its bullish order block in euro pound. Now, euro pound is manipulated between the euro dollar and the British pound dollar. So if we understand the relationship between the two and couple it with the level we had identified, 96.15 on dollar, Then we have a loaded deal. It's of high probability setup then. Now, I already mentioned earlier, I was looking for this candle here to be supported, and it had to go back down into this bullish order block here, the down candle right before it came off that 111.30, and we came all the way back down, dipped really deep in there, okay, and that's why I had to set the stop had to be below the London low. For them to want to come all the way back down here and hit this low here, I'm going to be honest with you, had it done that, had it done a run below this low here, I still would have bought it. I would have bought it again after it got back above the 111.30. I would have bought it live. I would have pulled the webinar up, and I would have bought it again because the conditions were, as I described it here, euro pound in a bullish daily order block, dollar at a level where we should expect to see weakness, and euro should try to close in the range and try to catch up with the move up in cable that's already been seen in London. So does that make sense? I know some of you knew it might have went over your head a little bit, but what I just described, does it make sense, why I went with the euro dollar when the cable didn't give me an opportunity because I already missed it? Okay, good. Now looking at the euro, look at the market profile that we have here. Okay, we have consolidation. Okay, market comes down, finds its low in London, rallies away, okay, and then finds some resistance at the Asian range low. Okay, comes back down, makes one more run into the order block, and then waits for the news. Waits for the news. Okay, when we look at the calendar every single day when we do live sessions like this, I'm always going to take you to the economic calendar from Forex Factory. You always want to know where are these high impact or medium impact releases are. By having those times, okay, you're going to know far in advance when the algos are actually going to be reaching for liquidity or expanding on the range relative to those time releases. So we're blending time relative to the news releases and the kill zones. You have to couple both of them. So you can schedule your trading around, I know that there's going to be a setup relative to these red, I'm not going to go back over to it, but if you go to Forex Factory and pull up the calendar, they have a way of showing the importance of some of these news releases. Some of them are red, some of them are orange, and some of them are yellow. I don't care about the low impact ones. I'm more concerned about the red ones. If you focus just on the red ones, they'll give you every setup you'll ever want. The medium impact are just as important, but sometimes they don't have as much magnitude behind the moves or that much manipulation behind them. But if you look at the economic calendar like that, you can literally go across the entire scope of Monday through Friday and say, okay, I know that there will be a manipulation at that time period. And I know if I go through and find out where the liquidity is, where's the higher time frame trying to take me to, daily 4 hour, okay, all I have to do is wait for that time of day and just go in and look for an opportunity relative to the tools that you know. I appreciate that, Simon. He's saying MyFX book has an excellent calendar for mobiles. I don't trade the dollar index, and a lot of guys are asking the same question, so I'm just going to answer here. And please don't ask any more questions because I'm really tempted to go looking over here. But I never trade the dollar index. I never trade the dollar itself. I always use it as a barometer, like the Dow Jones for stock picking and timing. I use the dollar as a barometer. Should I be a buyer in foreign currency or should I be a seller? And that's the only thing I do with the dollar. I just look at it and give me key levels, and then I can justify whether I want to be a buyer or seller relative to that. Okay. So now we know we had areas of liquidity that we would map out and look for range expansion. So we had a level of watch for dollar for bearishness, 96.15. We had a level all week for fiber, Euro USD, at 111.30. Missed opportunity in cable. I wasn't able to do anything with cable. But the levels that we talked about in advance for euro dollar, and this morning discovering the fact that there was an opportunity there, gave us a buying condition. I had to fight through psychological barriers because of the effects of what PayPal has had on this service. And we had mapped out 2 areas of liquidity, actually 3. I didn't really put the box over, but we talked about an area over here coming up in closing potentially this range, but I wasn't interested in capturing all of it, but necessary. But we did mention that the stops above this level here would be reached. We still have some time, a little bit. It might shoot up in there going into noon New York time. But the high on this candle comes in at 111.95, and the high so far today comes in at 111.95. That's way too clean. They're still respecting this little, I don't know what you want to call that. It's just candy land. I mean, there's so much reason to want to jump up in that little area there and clean that up. To me, I'll be surprised if they don't do it by noon. But we knew, relative to these clean levels like this and clean levels like this, the markets already came down once, twice, reached through 130, but look at the buys of the candle, reached through it one more time, came down and hit it as a London low. Okay, at the same time, dollar failed. When we see this like this, okay, we have a high probability support level. And what makes high probability support level on the fiber like this? Let's go out to daily. Okay, and it's this body or open on this down candle. That's the level we're looking at right in here. Okay, right there. So the open comes in at 111.31. We don't trade at weird numbers like that. We just round it to the nearest whole number or 0 level or the mid 5 level. Okay, so 111.30 is the reason why we said that level is interesting, okay, for this week. And you saw how much interest it caused in trading today. And admittedly, if we would have got something in cable, I would have missed all this, and I would have had to use this as an example in hindsight, saying, and here you go, here's one more example. But we just happen to be fortunate enough to capture it, you know, live and go through all the expectations. Now, because we saw the euro trading down at this support level, 111.30, relative to a daily order block of guys, for note-taking purposes, if you do not have daily and 4-hour levels on your analysis for every single trading day, if you don't have these levels on your chart, you are trading blind. You are absolutely gambling. You're not going to see the results of your trading that you're hoping to get if you do not have daily and 4-hour order blocks, voids, or liquidity pools on your chart. If you just trade on those levels, I promise, I guarantee you, you will have 6 to 8 setups a month that will pay out easily over 50 to 75 pips every single time you sit down the charts. You'll have those conditions waiting for you to trade on. You just got to wait for time and price to meet. What do I mean by that? Well, we have this level 111.30. Once it hits that level, we know what? The likelihood is it's going to go higher. Where is it going to go? It's going to go to where the liquidity is on the other side of the range. That means here's where the stops are. So they're going to run there. It hit that quickly. Above these levels over here, it's clean. It ran that out as well. Now we have this liquidity pool resting right here. It's going to hit that. We'll probably see it sweep up into 112, big figure like we talked about earlier this morning. But they're not going to leave that level like that. It's too clean, way too clean. Even if this thing's only going up here to ultimately fall through 111.30, who knows? Okay, right now you're trading with the probabilities based on what the chart is showing you right now. And you're all asking for, show me how to get in and give me the strong setups. They're found by using the daily and the 4-hour levels. Just like we've talked about this week, we got one more example of it happening here, and we're very fortunate and blessed to have one of these things come to fruition, you know, in a group setting.